Hello guys. I hope Lishapo. It's a Sunday, and or it won't be a complete Sunday without us checking out Nasdaq. So already I gave you a video on VIX 75, and then usually on Sundays, if you're new here, I always put up at least two videos, of the stuff that you can just monitor over the next trading week, and even take advantage of if you get opportunities to enter. So if you like this style of trading and you are interested in maybe learning this type of approach to the market even further, you can just leave a comment or contact me on WhatsApp or Telegram, and then we will take it from there so that you can join maybe the mentorship for this month, right? But otherwise, I'll just continue giving you some of the videos here, but the stuff is sort of discussed in deeper details in the mentorship. So let's get started. This is our US 100, the Nasdaq, and we always look at this one. This is our favorite one. So let's get started. Remember, here we do not just go to one time frame and we start making decisions there, because otherwise that would be like a prediction, and we don't predict, we analyze. So that's why we need to have a bigger picture and drill it down until we can say, therefore, after checking out all the necessary time frames, so that we do not don't make a mistake of trading on one time frame and ignore the other ones, because you find that you are trading your M15 is bearish and it's saying sell. But when you look at your weekly is touching a weekly very strong area of support. So now if you are selling there on your M15, you don't know what's happening on weekly, you're going to end up trying to sell inside a zone where there's a lot of buy orders, and that's how you lose money. So that's why here I always show you that we always start with the highest time frame, we work our way down. So let's get started. So this is our monthly chart. It looks like this. Currently this is our support. You can put it there. Yes, we can put it like that. This is our monthly support, and because of what, and remember, we're marking it from this, and then it was tested here. This is the second touch. So the support is still quite strong. Why? Because it is a monthly one. Point number one. And the negative thing about it is that it is not fresh, meaning the price is not touching it for the first time. That's because you find that when the price was here, that's the thing with taking trades from a zone that is not fresh, because you find that when the price was here, it collected all the buy orders. Now it's coming for the second time, it doesn't have buy orders. The price dips deeper to try and find them lower than that, you see. So that's why the first touch is always the strongest, is the one that has got higher chances of what of working out. From the second one, because the zone is no longer fresh, the zone becomes weaker as it's being tested more than once. So that's all that we have. You can say that the price is inside the support. And then in terms of a resistance, I think I looked at this one on, when was it? I think probably Wednesday with the guys in the mentorship. We were discussing why, which point to take between this and this one. It was a very heated discussion, but I ended up showing them why we have to go with this one and not that one. It's something that's what I'm saying in the videos that I put here. Yes, I'll give you the tips, I'll show you. If you are paying attention, you can still use the videos here to apply the concepts on whatever instrument that you like and still make money that side. But in the mentorship, I make sure that I go into deeper details. Even when I'm not there, you must still be able to trade on your own. That's why I don't give signals there. I'll be spoon feeding you, and that won't be good for you, because it means when every day when you wake up, you have to always check up on me to see if I've got anything to give you so that you can execute. No, you must. I go for what? Empowerment. I want to empower you so that you go there and trade alone. You go there and make decisions on your own. Come up with your own signals. Because if you are relying on my signals, what if something happens to me and I can't continue giving you the signals? It means now all the money you've been making, your trading stops now, you see. So that's why I decided to go with the mentorship, right? So here, like I said, this is your support and this is your resistance. And now, because the support is not fresh, if you look at what the bulls tried to do, remember, a support, it's a zone, it's a territory for bulls. That's where you expect the bulls to be very strong and defend their zone, come in strongly, because there's a lot of buy orders. They sort of provide the demand, and then the price, it drives the price up. You can see that when the zone was touched here for the first time, the bulls, yes, they became very aggressive. You can see that one white candlestick, which is a bullish one, and it gave us what? Bullish engulfing, right? And remember, I always tell you that when you are executing on that time frame, usually that's why you mark the support and resistance, so that you can see where the price is coming from and where it is trying to get to. So here, this is the support, and at the time when the price was touching for the first time, the resistance was that one, and the price went up. The highest point it reached is around there. So basically, it did not touch the resistance. So that's where you put a question mark to say, what's wrong with my bulls now? What's wrong with my bulls? Because of what? They are supposed to be in charge until the bears start to come in. Some of the bulls, they exit the market. So in this case, why did they run out of steam here? Because I didn't expect the sellers to be there around that area, to be the one dominating. I expect the bulls to be the one that are still pushing up, at least until they encounter what? A territory of the sellers. That's where maybe they were gonna do something like that. So that's where the question mark started, to say that here are the bulls, they're coming from their support, they're pushing up strongly, but all of a sudden the steam is out, the sellers are back in. They haven't even, they are not even at their zone, but they are pushing down. That's where the sellers, I mean the bulls, showed that they could be weak. That's why I'm saying the negative thing now could be that the zone is not fresh, and because of that weakness, where the bulls fail to reach that, this can end up even being going down to the next support. But remember, that's not what I'm saying is going to happen. That's why you need to look at the both sides of the story. And remember, you don't trade monthly. And again, I always say to you, please, 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 do not predict a breakout of a key structure. You see, you are going to trade for as long as it is hit. You pretend, you're going to treat it as a valid zone that is still holding up until the day the price breaks it. Then you can say, now my support has been taken out, let me shift to the next one. Until we break the current one, this will always be what? The support. And should I get reasons to buy there, get the confirmation, I can buy. But don't make that mistake of saying when you are buying, you're going to buy for long term, and then you start doing something like this. Because of what? Currently this time frame is what? Is bearish, because there are areas of support that are being broken. You can see that even here. I don't know if you guys are wearing your glasses, Mr. Tabang. The guy from group number 1. Remember, I used to tell you about your glasses. I don't know if you will agree with me here, but this is a lower low. This is a lower low. You can see that this price compared to that one, this is definitely lower than the first one. So that being the case, it means on this time frame, you can put what? It is bearish. There is the bearish trend line, and like you already mentioned, here is your resistance, here is your support, right? That's what I'm saying. When you're buying, you need to keep in mind these big time frames, they are bearish. So don't try and come up with a long-term signal as yet and say I'm gonna hold until next year. You see people giving you signals like buy Nasdaq, delete your MT4, we will meet at Mercedes-Benz next year. That's where you will go there, I don't know, deposit again next year. You cannot trade like that, because currently there is you don't have any ground. You don't have anything to stand on to say that I can have a long-term trade, simply because when you are planning a long-term trade, even the higher time frames, they must agree with that. And in this case, the monthly is not agreeing with you taking a long-term buy trade. You can have a your short-term buy trades where you're just gonna buy there and exit somewhere there. Remember this small space here on your H1 and stuff. It can be until your next opposite structure is hit. But as long as that does not affect the structure of your higher time frames, you can do that. The guys in the group, the current group, I used to tell them that it's a smash and grab. And when you're doing smash and grab, you don't waste time. You don't stay there for too long. You will only plan a long-term trade the day the structure on the higher time frames agrees with that. So for now, yes, the support on higher time frame is hit, you are allowed to search for trades to go long, but they must never be long-term trades. I hope that is clear, because even in the previous video I made on Nasdaq, I did make it very clear that yes, this is where you can take your trades, but until around there you need to exit. Why? Because the structure is still bearish and the structures are not yet broken, so we cannot plan trades against that. So now we are on weekly. On weekly, you can even take this point and make it your weekly support, which will be somewhere around there. The weekly support, you still need to know that for as long as you know it is inside the monthly one, the weekly one is inside the monthly, the prices hit both of them, that's fine. And we also agreed that around here the price went lower than this point, so which means on this time frame you can put your thing there if you believe that this is a swing. If you feel like it's a pause, you know what to do. You just have to put what? Your trend line somewhere up there. And then someone will ask why, but that's something else. I cannot go into details with that one. That's gonna be a topic for another day. But the guys that took the thing, they've already had the thing, the classes, they know why. So, but in this case, the nearest resistance there, remember, we just need to know where is the nearest support, where is the nearest resistance, that when one is hit and you are planning trades, we know we're already planning what? Exit. You cannot just go in the trade but you don't know where you're going to exit. The same way you cannot just say, I know the trend is bearish, I should be buying, but you don't know where exactly to enter. That's a disaster, because you're going to end up executing even where you don't have to, like where it's not safe for you to do that. So that's why it's important to know where you are. So here we are saying the support is somewhere around there. Remember, we traced it back, and then the resistance is here. And this time frame is still very much bearish. Look at the candlesticks that you had for the past 5 weeks or so, right? Because at some point when the price, before the price gave us the lower low now, right? This is what we had. The price was moving down, and then it gave us this support here that broke the trend line and broke the resistance. So that's why when the price was coming back towards the same area, you could draw it there. You could also say there's something from up there, right? So you look at what happened. The price came and touched that. It left with what? This is what we called that bullish engulfing. That's when you say, oh, remember, it seems like the buy orders at the buy bulls zone has been triggered. Now the price is reversing. That's a good thing. But they still failed to at least go to the point, the next highest point there. That's why we say, even on monthly, there was that question mark to say, why is it that the bulls are at their zone, but they are failing to take the price until the opponents come in? And then now all of a sudden the bears did this, which is what? Bearish engulfing. That's where you're like, nah, these bulls, their story are equal. And like, why are they allowing the bears to engulf their price action at their own? Imagine someone coming to your house and then he moves you there, and then you're just chilling there doing nothing. Nah, that's not good on your side. That's why I'm saying what the sellers are doing here at the territory of the bulls, it's a sign that the bulls are being moored. You see, that's where the problem started. And then now we went down and created a new low. That's why that trend line that was here, we just had to take it out, put it somewhere there, right? So now we're saying this time frame is very bearish, but we understand we're inside a weekly support that is inside a monthly support, and it is not fresh. Keep that in mind, but it is still a very strong higher time frame support. So that's when we mention things like smash and grab. So here, if this is the execution time frame, you don't yet have a reason to do the smash and grab. Like if you're executing on weekly, as like the time frame you're trading the structures here, you don't have. But if you had a reason to buy, you will buy and exit there, because we are saying that is the next opposite structure on this time frame. You exit there because you don't know what the price is going to do when it gets to that resistance, because the resistance is still very strong. Why? Because the time frame is bearish. The time frame is bearish, and the trend line also not yet broken. So that's why you are doing smash and grab, short term kind of a thing. Don't try and make that a long term. because that's where the problem is going to start. I said do not predict a breakout of structures. If you want to make your life easier, target the next opposite structure and then you're out. So that's all that you have on weekly. Let's quickly do daily. Let's see what you got this side. So on daily, remember when the price came inside, I just showed you the thing on weekly where I said the weekly support, and then the price was coming, and then you touch it there, went deeper into it, but it still broke it. So the lowest zone that you had on daily was here, was this one. And what the price did was that it's been touching this level. It was not fresh, and then it came here, it did this. Yes, if you still remember in that video, I commented on this. I commented in the previous video. If you haven't watched it after this one, make sure that you watch it. It's also about Nasdaq. I commented on this to say that on this time frame, which is our daily time frame, we are hitting a daily support, ne? And I just said that when you hit a support is a zone for the bulls. We expect the bulls to be the ones dictating the price there because that's their home, you see. But now the problem is that I'm telling you that the first touch is always the strongest. Anything after that, everything after that, it's now something else. It's the zone is no longer strong, which is why I'm saying when the zone is still fresh, there's a lot of buy orders there at that support. But once the price has tested that and then it went up, it took some of those orders, so the zone is no longer strong. You see, so it will get to a point where it might even break it. So the more it is being tested, the weaker it gets. It will get to a point where all the orders have been collected. The price now comes in. It doesn't have any orders to collect. It just breaks the zone. But you'll never know when that is going to happen. The price can touch the zone once, break it on the second attempt. Touch it twice, break it on the third one. Touch it 10 times, break it on the 11th one. So that's what I'm saying. You don't predict when a zone or a trend line is going to be broken, because yes, we understand it is becoming weaker, but you just have to treat it. It's still there. You just have to say, if I get confirmation, I'll enter. If I don't enter, because of what? I need confirmation. This is not a strong zone, right? So in this case, the price was coming to a zone that has been hit, like I already mentioned, at least twice, right? So now look what the price is giving you at that zone. It is giving you these candlesticks. These are what you're calling bearish rejections. So this is a buyer's zone. I mean, this is a bull's zone. Why are the bears the ones that are rejecting the price? That's not good. That's not good. So that's what I commented on and say, no, the price might end up even challenging the zone, right? So look what happened. After the price gave those bearish rejection candlestick, the bulls really tried, Sham. They really tried to come and convince us, hey, we're still alive, by doing what? By taking the price slightly above the pin bar. And then that's when you're like, okay, maybe they are defending their zone. But they are still failing to at least go to that. They are still failing. Look what the next candlestick did. Exactly that, which is what, still another bearish thing, another bearish engulfing. That's where you're like, hey, this zone has got a lot of problems. It has got a lot of things that it has to push against, you see. So that's when you're like, these bulls at this zone, maybe most of the orders have been taken out, which is why I'm saying when you are buying, please don't make it a long-term thing, because even daily is bearish. So where do you get the lever, the audacity to say, I'm gonna buy now, delete my MT4, and then I'll check on my trades next year March? Where do you get the audacity to do that? Because for you to be able to do that, the time frames that are, remember, long term means higher time frames. That's why the people that are doing long term, if someone is planning to invest in something, they won't be looking at M15 chart to check the structure there for them to enter. No, they will be doing Buma 2 months, 1 month chart, just to check the bigger picture, to say currently we are here. Is it a good time for me to invest? Because of what? The higher time frame is giving them a bigger picture, which means long term. The same thing I'm saying, if you are planning a long-term trade, you cannot plan a long-term trade if the higher time frame structure does not agree with that. I hope this makes sense, because that's the mistake that most people do. You are trading on M15, but you end up saying, I'll buy and then exit next year. Yes, if the structure on the other time frames allows you to do that, the higher time frames. But if not, then make sure that whatever that you're doing, be happy with your profit when the price hits the next opposite structure. Unless if you have more than one trade, then you leave the other one running to say that I'll just see how far it can go. You see? So this is our daily chart. Now the bears came and did what? They came and engulfed the price again. And then from there, that's when the next day also we went down. And I believe that is when we went lower than this. That is when we went lower than that. You can see that we definitely went lower than it. That's when you say this zone has been taken out. The signs were there, man. The signs were there. You cannot ignore them and say, I will delete my MT4. I will see it next year. The signs are there that the price is not ready to take off for long term. Now we broke that. You can just say on this time frame, let's zoom in. On this time frame, the structure looks. You can draw your trend line here, or you can draw it there. Whichever ones you feel like these are the pauses. I mean the swings. You can put it there. But you need to keep in mind this is still bearish, and this is your next resistance on this time frame. In terms of you taking sell trades there, that's a story for another day. You still have to assess this level to see if it qualifies for you to take trades from it. Currently, you cannot sell from that unless if you've been holding a sell trades, and then a sell trade, you're just trailing your stop loss. That's fine, but you cannot open a new sell there. I'll just give you one reason. First reason will be that because you are inside a monthly support, weekly support, so those are higher time frame structures. So which basically means should the price go up to your daily resistance, it's coming from a monthly support. Why are you trying to push against the monthly support with the daily structure? But yes, if you're holding a trade and then you want to take chances to say that should it break that, then it's fine. You can just use this trailing stop loss, because there your trade is risk free. But you cannot open a new trade and expose the account. That trade will never be a loss, so that one is fine. So let's see. So meaning if you are executing on daily and you know where you are inside the monthly, weekly support, should maybe the price dip nyana there, and then you feel like it gives you confirmation to enter there. You just have to check until you hit the next opposite structure if the distance is enough. If the distance is enough for you to take your profit, then it means that's where you'll execute. But keep in mind, you're targeting the next opposite structure. You out because of what? We are still bearish. We don't know what's going to happen there. This can still push the price down. So that's why I'm saying, for you to have something longer term, or maybe hold it for a couple of weeks, you just have to wait for the price to do what? Maybe on this time frame, if you get that you exited there, maybe if you have got more than one trade, remember I said when you hit that, you can just bring your stop loss somewhere above there, and then you say, should that be taken out? At least I still have one trade from all the way to from the bottom there. Then when that happens, you can say the trend line has been taken out, the resistance has been taken out, a pullback, maybe take your chances targeting the next structures. That's how you trade. That's why I'm saying, for you to take something long term or swing, you need to make sure that the structures on those time frames are great. So remove those structures that are on your way to open more space to move up. So that's all that you have on daily. Let's do one time frame, which is what? H4, and see how is the structure this side. It looks something like this. So you can say my trend line on this time frame is there. You can do that, but remember the H4 is gonna be all the way back inside that weekly, inside that daily. We're not gonna waste time scrolling into that. We know that we're inside the weekly, the monthly, and everything, so that's fine. So this is your H4. The trend line is there. The next opposite resistance is there. So if you are executing H4 from where the current price is at, and then it gives you whatever that you use as a confirmation. Once it gives you that, you can execute. But don't say I'm executing. Maybe let's say the price is there, it gives you confirmation you're executing. Do not say I execute here, my take profit is there. Because remember, you're executing H4, the next opposite structure must be on H4, which means from there until there. This is a very decent space. This is H4. It's a very decent space. It's a decent amount of pips. So from there, you out. If you had more than one trade, maybe you take one trade and then you put your stop losses there, and then you're saying, should this be broken, at least I still have a trade. Should the price then not break it and come back, it's fine. It will kick me out with a small profit. It will never be a loss. But don't make a mistake of trying to sell. We understand that the monthly bearish, weekly bearish, daily bearish, H4 bearish, but where is the price? Which is why I said, when you are buying or when you are trading, you cannot just go to H1 or M15 and then you start executing there, because you say those time frames, maybe they are bearish and then they are giving you reasons to sell. Yes, it might work, but it's not a good idea for you to sell inside a support zone. It's not a good idea. So that's what you have here. You can either say, if I get confirmation, I'll buy until there. That's what we call smash and grab. Or I'm very patient. In the meantime, I'll do something else until the structure changes, and then the pullback, I take it targeting the next structures. You can also do that. So that's up to you. Let's see if we can find anything on H1, but it won't be too different to what we have on H4. You can still have this as your trend line on this time frame. The next structure is there, which is the resistance, and it's still around the H4 resistance. You get that confirmation, you are exiting there. Or if you break out this, you get a pullback, you can buy the confirmation there and then you execute that. Hi, I hope this makes sense. I hope this makes sense. So if you haven't subscribed, you just have to make sure that if you like this style of trading where we just, every decision that we make is based on what I'm seeing here on the chart. I don't have any indicator where it's gonna be on my chart. That's why you'll never see me plugging anything on my screen besides just the rectangle, me marking my zones, and also a trend line. That's it, because that's what I want. That is what is gonna tell me what is happening with the trend. So if you are interested in learning more of this strategy, like in deeper details, from the basics until this stuff where you're applying it like this, it doesn't matter whether you have got experience in the markets or you're still new. It's fine, because I do believe that when you're still new, that's even better, because if you've got experience, some of you I saw in the first group and also in the second group, some of you you come with I'm not saying this is like the strategy where if you trade it, you're not going to lose trade, but no, because I teach you even the risk management and stuff like that, and how to apply the strategy. It will work for you. In a month, when you check your progress, you'll find you'll have losses here and there, but if you're managing your risk, you'll always be on the positive side, right? So when you are new and you don't have any background, because most of you come from the direction where you were learning indicator this, that, you were taking signals, you were being taught this and that, the Superman chart, Superman strategy, Superman shape or pattern, stuff like that, you see. So, and it didn't work for you. So when you are coming here learning something different, at first it's going to be difficult for you to get rid of that past information to learn the new one. But if you are fresh, at least you don't have anything. When I say the basics, it's the basics that I'm teaching you. That's what I'm saying. In the mentorship, I don't want only people that have got experience. Whether you've got experience or not, when you come to me, I'll treat you the same way. I will treat you guys as if like people that don't know anything, so that we start on a clean slate, new information, new everything. You see? So you can just contact me on... can do it on Telegram preferably, or even on WhatsApp, and then I'll get back to you. Let's see if you can't get into the mentorship for the next group. So all right guys, so that's what I had for you on Nasdaq. You can try and take advantage of this. Just monitor it and see how it goes. So remember, you're not gonna say when the market opens you're buying. No, the time frames are still pointing down. You make sure you get confirmation before you can execute, and always target the next opposite structure. All right guys, I'll see you in the next one. I think 2 videos for today. They should be enough. I will give you maybe US 30 tomorrow. Thank you.